Welcome to Charts Today. My name's David Linton, and today's edition for Monday, the 28th of November, comes to you from London. And quite a lot of red on the screen this morning. Red shirt, red screen, a lot of things falling. The big concerns are what's going on in China. That's the new concern. Here we see the oil price breaking down to new lows through the trend. And this is a chart of COVID cases. You can get this in Updata. Just connect your system to our world and data. And we see here that we've got this spike high in new cases, which is the highest it's been. So the really big question is, where is that chart going to start turning south? This is the 5-day moving average of new cases, and we need to see it topping and turning over, and then there's no signs of that yet. So that is the concern in markets at the moment, and that is having implications for commodities. China has obviously a voracious appetite for commodities, and then of course the supply chain issues, support of exporting chips and things like that. And we're starting to hear stories of Apple struggling to get what they need. So it will be interesting to see how these lockdowns in China, and on top of that, the political woes, and of course the sadness of more people dying. So COVID is coming back to bite us in terms of what's happening in China. So that's the fear that's running through the markets this morning. We start by looking at currencies, then we'll look at stock markets, and finally commodities, and we'll look at the energy mix last of all. So we see the dollar index falling away. Remember when the dollar index fell through 110, we said that was the end of the run in the dollar. Our big call for the year was that 2022 would be the year of the dollar. It's been very strong. It was up 20%, but we're now seeing that run ending and we're falling away. We will probably go into a long-term consolidation phase, but for the moment we are pulling back. Remembering this is my weekly, my daily, and my 60-minute chart, my long-term, medium-term and short-term view of the markets with the corresponding point and figure charts. If we're above the cloud, we're bullish. If we're below the cloud, we're bearish. And we are below the cloud on the medium term and the short-term chart, and making new lows. And of course we put our reports out to clients this morning, and if we look at the alerts that we're seeing in the system, there's a new 90-bar low on the dollar index. So we are just seeing those targets coming in, quite a lot of red downside targets coming into the alerts as well. So for the moment, its dollar weakness continues this week, and that means we're seeing euro strength. Whilst the euro is above parity, that's looking good. We still do have very long-term downside targets for the euro, but for the moment we are seeing a recovery. We're retracing some of this move that we've seen this year, and we may well go into a long consolidation phase here as well. The Japanese yen is sitting at 137.90 this morning, back below that 140 level, and again just wandering below the cloud. Remembering the Ichimoku clouds are very heavily used in Japan, so we shouldn't be surprised to see them working here, and we are just about to wander through the cloud on the lagging line, so that's quite key. Sterling holding on to the 120 level against the dollar, so that's looking stronger, and we are just seeing these upside targets here, 122, 125, 127 on the 60-minute chart. If you're trading sterling, remember to look at the 1-minute chart. If we look at the sterling euro chart, we're sitting at 115. So we are just falling back there through the cloud this morning, but we do still have quite good upside targets. So it'll be interesting to see whether sterling can get that upper hand against the euro. But for the moment, we are just seeing some short-term weakness kicking in. If we look at Bitcoin, we're holding the $16,000 level. Of course, we've got this downside target to 9,000 on Bitcoin. We can't ignore that now. That's in place, and watch for new lows there, and we will activate more downside targets. On the short-term chart, we're nearly at the targets for today, so we're down 1.4%. The S&P 500 index was little changed on Friday, remembering it was the day between Thanksgiving and the weekend, so really wasn't much action there in the markets, with a lot of people still on holiday. But we are seeing the futures today for the S&P. We are down 0.75%. The Nasdaq E-mini down 80%, and of course a lot of tech stocks are going to have issues. Amazon, Apple, if this Chinese supply chain gets further disruption, that is going to play into that into tech stocks. Now, looking at the FTSE future, we are still looking pretty bullish there. We are very close to making new highs. And if we look at the DAX in Germany, of course, strong export market to the Chinese market. So that is starting to have an impact, and just concerns and fears over energy prices. And winter is coming, of course. So we are going to see the German economy starting to be tested if we see higher gas and power prices, which we'll look at in a minute. The CAC in France also lower. Japanese market has pulled back. It is still looking pretty strong above the cloud with good upside targets, bullish on all three time frames. We just pulled back overnight. And if we look at the Hang Seng, down 1.5%, no big surprises there. And the Chinese market also down 0.75%, still bearish below the cloud. And of course, if we make new lows, this idea of a double bottom pattern disappears completely. Looking at the Indian market making new all-time highs, so that is highly significant, and really that is really the most powerful looking market at the moment. So things in India are looking pretty good. The Aussie market down 0.4%, resource-laden stocks falling there, of course, with fears on China as well. We are seeing also demand for other soft commodities. Wheat is 1% lower. Gold is actually up this morning, and of course, fears of what's going on in China just fueling that a little bit. And the weaker dollar helps precious metals and commodities, of course. And if we look at US 10-year yields, they're continuing to fall back. We are seeing at 3.7% yield curve conversion, still a slight issue there. All eyes today on Apple and Amazon. The news stories coming out of China might well have an impact. We are still bearish below the cloud on Apple. Remembering that 130 level back in June is the key level to hold for Apple. A big share buyback program in Apple stock has helped Apple hold up. But if we look at other stocks, we see here, for example, Amazon making new lows. And again, the Chinese situation will affect them if this story becomes bigger. Now, looking at the energy mix, we've got Brent crude lower, down 3%, made new lows on Friday. Downside targets here back to into the 70s, really. We're still above 80, but we've got all these downside targets now into the 70s. Looks like crude is going lower. Coal is little changed. It's looking still holding on to the gains there, but it is bearish below the daily and the 60-minute cloud. We do have this nice upside target, but Chinese demand is probably going to kick through. And even gas prices are falling. We're down 4% on TTF this morning, but we are seeing this base building here, and that's going to be quite key. We are just seeing very much that base building, an ascending triangle building. We are likely to break higher, and of course colder weather on the way. That is going to have an impact. And if we look at German power, it's down 3.5%. This is on the Cal 23 contract. Cal 24 is holding onto the support level. So it still looks like German power has found that floor, just waiting for a break to the upside. Now that's it for today. Keep an eye on those currencies. We are going to see quite a lot of movement with this feature of what's going on in China, and keep watching your 1 minute targets. That's going to be key. Until tomorrow, happy charting. See you then.